We've got an entire research lineup here to tell you about the laggards, the movers, and of course the macros as well. Darshan joins in, Megha as well is with us, and Poonam too is waiting by to analyze the macros that we are dealing with right now. But Darshan, I'm going to come to you first. What is it that you're gauging in terms of how the top gainers have been, and whether or not do you think they're going to continue to lead the charge?
See, Aisha, you really don't look at these numbers, but when you on a day-to-day basis, but then once you look at it, you're really surprised by the move that some of these indices and stocks have given. For one, the auto index has actually outperformed, so it has grown almost 284% in the last 5 years. And the worst performer in the entire auto index was Amtech Auto, which actually grew 43%. Hero Moto has actually doubled. The best performer at this point of time was Eicher Motors, which has grown almost 2,700%. So it was at 60 rupees, it's almost at 6,000 rupees currently. The other counters, Amara Raja Battery has grown more than almost 1,300%. So clearly auto as a sector has been doing extremely well. One of the reason was the currency impact, because there's a lot of export that is going on. So auto is something that the rupee and the yen weakened against the dollar, so that helped a lot of companies like Maruti, Hero. Apart from it, the strong sales seen in some of the two-wheeler space was doing extremely well. Tractors as a segment did very, very well. So auto as a sector clearly outperformed. The second sector that did it extremely well was the FMCG sector. The FMCG sector was up almost 256%, and the worst performer was Tata Global Beverages, and the performance was it grew 100%. So clearly the worst performer also grew 100%. The best performance has been from Jubilant Foodworks, which actually moved up almost close to 700%. Mainly, over the past few years, the market has been rather weak for some time, and that is where money started flowing back into the defensive. So counters, in the FMCG space saw a lot of money coming in. And the second important factor was, a whole host of open offers that came in, be it HUL, be it Glaxo Consumer, be it United Spirits. So clearly this sector was buzzing with M&A activity and open offers. So this sector did extremely well in trade. And the last sector that did well was the pharma sector, and it has been doing well throughout the year, be it any government. So this grew almost 218% in the FMCG, in the UPA government. The worst performer was Cipla, which actually moved up almost 72%. The best performer has been Aurobindo Pharma, which has been close to 1,000%, a total turnaround that has come in. Now, what benefited the pharma index, first of all, was the rupee. Given the fact that it fell almost 16%, a lot of these companies have huge amount of exposure to the US market. So their results were extremely good. Apart from it, the new FDA, there was a new FDA approval, so a lot of ANDAs coming in, so the products were launched, so they were getting a lot of money from there. And several M&A activities in this space kept the entire sector abuzz. So if you're looking at it, these three sectors did extremely well during UPA2.
Right, Darshan, thanks a lot for that. Exporters did well. That is the punchline. Companies which had nothing to do with the UPA regime, they did well. Companies which had everything to do with consumer and global regime, they did well. But Megha, reverse end of the spectrum, anything which had got to do with policy, power, infrastructure, took it on the chin.
Absolutely right, Nikunj. In fact, the sectors that perform the worst, can be the usual suspects, because we've been discussing them over the last 5 years endlessly about how policy paralysis is plaguing these sectors. So take a look at the way the real estate pack has moved, the power sector, the infrastructure sector basically in the country has literally collapsed. The real estate index, take a look at that one up first. That tumbled over 36%. You had the likes of a Unitech, HDIL, Indiabulls, all of them have lost over 40% apiece, and we've seen how the entire slowdown that the economy has seen has flown through to the bottom, and we've seen the demand for all of these companies slowing down. Not just that, of course, the leverage burden that these companies are dealing with has been extremely high. The cash flow has been extremely tight as well for them, and that's created problems not just for working capital, but even in terms of servicing the leverage burden that they have on their books. In addition to that, of course, project clearances, getting all those environmental as well as land land clearances has also been a big roadblock. And it's clearly, you know, these policy clearances, the environmental clearances that have played havoc with the way the infrastructure as well as the power pack has also moved. For power specifically, of course, we've seen how fuel supply has been a big hindrance. You know, whether you look at gas, whether you look at coal, there's been so many blockades on that end. Then in addition to that, of course, getting environmental clearances for getting these projects off board has been the other factor. And for power, the power purchase agreements that they've signed with the state electricity boards to ensure that there's offtake of power as well has been in the doldrums. We've seen SCBs being straddled with high burden of debt. They've not been able to service and pay for the power that they've been purchasing from these companies. So that's got to be another big you know, tumbling point that the power companies have been facing. For infrastructure, again, environmental clearances and the lack of clarity as well as speed with which the projects get cleared has been a big roadblock. Not just that, project award itself, we've seen it in the road sector. You know, NHAI for 2 years in a row has missed its targets for the year in terms of project award quite considerably at that. In fact, they've changed the model as well on which they allocate these projects. And in addition to that, of course, financial stress has been building up for all these companies.
Poonam, I want to get you in on the macros then. Whatever could go wrong has gone wrong with the UPA2 regime, be it the currency weakness, the current account deficit, inflation spike, what have you. It's been quite problematic, a regime.
That's true, Aisha. In fact, across the board, all the macros did fall apart during 2012-2013 duration. And here is a lowdown on that. Rupee, if we see, the UPA2 government started the rupee at 49.39 as on 15th of May 2009. And it did hit a high of 44.07. But look at this, the rupee hit an all-time low of 68.8 on 26th of August 2013. As well as this was due to the reason that we had the forex reserves had fallen drastically, and we also had the problem of the twin deficits. Let's look at the forex reserves first. The UPA2 started the tenure with the forex reserves at $251.7 billion, wherein the reserves slipped to a low of $320.7 billion in September of 2011. It did slip to 274.8 during September of 2013, and the reserves did stand at a good $320 billion in September of 2011. So there was a huge slippage in the forex reserves. Not just that, we had the problem of the twin deficits as well, when the CAD had slipped to the highest level of 5.4% of GDP during December of 2012. And look at this, the UPA2 had started the CAD at 2% of GDP during March of 2009, and it had slipped to the highest level to 5.4% of GDP. Not just that, look at the fiscal deficit there. The fiscal deficit stood at 6% in March of 2009, but its fiscal deficit hit the highest in March 2010 to 6.5% of GDP, which was the highest fiscal deficit since 1999. And then during the entire March of 2011, 12 and 13, fiscal deficit has ranged between 4.9 to 5.8% of GDP. It's just that in the year FY14, post the huge measures taken, fiscal deficit is likely to come in a little lower at 4.6% of GDP. So all these things had impacted the rupee. And look at the other parameter, wherein because of all these measures, a lot of measures were taken by RBI as well as the government, and we saw the yield which stood at the highest at 9.24% as on 19th of August of 2013. This was the highest level seen since July of 2008. And when the UPA2 started, yield had stood actually at 6.41. Look at the inflation. The inflation also has been pretty much high. WPI has stood pretty much high, as well as with the RBI now focusing to CPI inflation. CPI has remained pretty much elevated, and inflation risk is a concern. WPI stood at highest of 10.88 in April 2010. And CPI has also stood at 11.16 by November of 2013.
Right, Poonam. Okay, Poonam. Thanks a lot for that. Megha and Darshan, thank you. Bear in mind that it's easy to criticize the UPA2 regime, but it also coincided with the global problems, what happened in US, problems in Europe, the problem of crackdown in PIGS nation. So, to be fair, they've done a bad job, but they've not done a horrible job.